So you've decided to invest in ETFs and Vanguard looks like a good option, but there's so many different Vanguard ETFs to choose from. Which one is the right one? Well, lucky for you, I've done the research, and in this video I'm going to be sharing with you what I think are the best Vanguard ETFs across different asset classes. We'll be covering fixed interest, Aussie shares, international shares, property, high growth, and even emerging markets. But before we get started, make sure you smash the like button and subscribe if you haven't already. This will help me out tremendously and let more people see this video. By the way, if you don't know what an ETF is, make sure you watch my beginner's guide to ETFs. For each ETF, we'll be looking at the fees, past performance, and what the ETF is actually tracking. First up, we have fixed interest, and my favorite Vanguard ETF for that is the Vanguard International Fixed Interest Hedge ETF. This ETF tracks the return of the Bloomberg Barclays Global Treasury Scaled Index and it's hedged into Australian dollars. So this ETF provides low-cost exposure to high-quality, income-generating securities that are issued by governments around the world. So this includes bonds, bills, treasury notes. This ETF only invests in securities that are rated from BBB all the way up to AAA. VIF has a low fee of only 0.2%. One advantage of this ETF is that it is hedged into Australian dollars. This means that it is relatively unaffected by currency fluctuations. Now let's look at past performance, but as always, remember that past performance is no guarantee of future results. In the past 1 year, VIF has returned 1.99%, which might not sound like a lot, but considering that most savings accounts in Australia are offering less than 1%, it's not too bad. If we zoom out a little bit and look at the 5-year returns, that's at 3.59%, and since its inception, the VIF has returned 3.99%. This ETF is relatively conservative and safe because it's highly unlikely that the governments of the United States, Japan, UK, France, all these governments are going to falter and essentially disappear. If in fact that is happening, then there's probably bigger things to worry about than just your Vanguard ETF. Let's say you want to invest in property, but you don't have the millions of dollars to do so. Well, Vanguard has an ETF for you. The Vanguard Australian Property Securities Index ETF, ticker symbol VAP, has you covered. VAP seeks to track the return of the ASX 300 A-REIT index before taking into account fees, expenses, and tax.
Wait, what's a REIT?
REIT stands for Real Estate Investment Trust, REIT, and it's essentially a company that invests, manages, and finances income-generating real estate. REITs work by pooling the capital of numerous investors. This makes it possible for individual investors like you and I to invest in real estate without having to buy, manage, and operate individual properties. VAP provides a low-cost way to invest in property securities that are listed on the Australian Stock Exchange. The property sectors in which this ETF is invested in include retail, commercial, industrial, and diversified. Like many of Vanguard's ETF, it has a low fee of 0.23%. Let's look at the past performance of VAP, and in the last year it has a negative 13.3%. Now this is quite alarming, but you have to consider the fact that there was a pandemic and that caused a decline in the demand for retail, commercial, and industrial real estate. If we zoom out a little bit and look at the 5-year return, it's actually at a 6.23%. And if we look at the performance since the inception of this ETF, you'll see that it's at 10.08%. Maybe you're more interested in investing in Australian shares. Well, Vanguard has you covered with the largest ETF in all of Australia. The Vanguard Australian Shares Index ETF, ticker symbol VAS. VAS seeks to track the return of the ASX 300 index. This ETF provides a low-cost way to have exposure to Australian companies listed on the stock exchange. It provides potential long-term capital gain growth, as well as dividend income and also that sweet franking credits. And you can invest in VAS for a low fee of only 0.1%. Now don't be too alarmed when you look at the past 1 year performance and it says that it has a negative 2.56% return. Remember, we went through a pandemic and a lot of the companies that were listed on the ASX haven't fully recovered from before the pandemic. If we zoom out a little bit and look at the 5-year returns, you'll see that it's at a pretty healthy 10.06% return. And since the inception of this ETF back in 2009, it's had an average return of 8.97%. And don't forget, with the franking credits from VAS, your return will probably be a little bit higher because you'll have a tax rebate. If you're looking to invest in international shares, the best Vanguard ETF for that is the Vanguard MSCI Index International Shares ETF. This ETF seeks to track the returns of the MSCI World Index. This ETF provides you exposure to some of the world's largest listed companies. Think Microsoft, Apple, Toyota, Johnson & Johnson. By investing in VGS, you get long-term growth potential of all these countries outside of Australia. One thing to note is that this ETF is exposed to any currency fluctuations because it's not hedged. And you get access to all these different companies for a low fee of 0.18%. Now, let's take a look at past performance. And in the last 1 year, it's returned 0.93%. If we look at the 5-year return, it's at a pretty healthy 11.66%. And since the inception of this ETF, it has averaged a return of 11.77%. Maybe you want to invest in emerging markets such as China and India. Well, Vanguard has you covered with the Vanguard Emerging Markets Shares ETF, ticker symbol VGE. This ETF provides low-cost exposure to companies listed on emerging markets. One thing to note about VGE is that it is skewed towards China, with 43.9% of the fund invested in companies listed in China. This is followed by Taiwan at 16.8%. Some of the companies in VGE include Alibaba, Tencent, and Taiwan Semiconductor Company. VGE has a higher fee compared to the other Vanguard ETFs, and the reason for this is because it's a little bit trickier to manage the emerging markets. If you've been following the news, you'll know that the Chinese economy has recovered really well from the pandemic, and it's no surprise that VGE has had a healthy return of 8.96 in the past year. If you look at the 5-year performance of VGE, it's at a really good 11.18%, and since the inception of this fund, it's averaged a return of 7.97%. If you're looking for a low-cost, high-growth investment option, then the Vanguard US Total Market Shares Index ETF is the way to go. This ETF provides investment exposure to all of the companies listed in the US. The ticker symbol for this ETF is VTS. And it is exposed to currency fluctuations because it's not hedged. It has an extremely low fee of 0.03%. Let's take a look at past performance. In the last 1 year, VTS has returned 5.26%. In the last 5 years, that return is at 14.82%. And since the fund was listed, it's returned an average of 15.34%. One of the reasons why there's such a low fee for this ETF is because it is US domiciled. What this means is that the company that holds the underlying shares is based in the US and it's subject to US taxation laws. So when it's time to do your taxes, you will need to fill out an extra form and also take a few more steps for your tax return. Because it is US domiciled, there is no currency hedging. And now for what I think is the best Vanguard ETF overall, drum roll. It's Vanguard Diversified High Growth Index ETF, ticker symbol VDHG. So unlike the other Vanguard ETFs I've talked about in this video, VDHG is a fund of funds. Specifically, it's made out of the following index funds: the Vanguard Australian Shares Index Fund, the Vanguard International Shares Index Fund, the Vanguard International Shares Index Fund Hedged, the Vanguard International Small Companies Index Fund, Vanguard Emerging Markets Shares Index Fund, Vanguard Australian Fixed Interest Index Fund, and the Vanguard Global Aggregate Bond Index Fund Hedged. And the reason why I've picked VDHG as the best overall Vanguard ETF is because it's a simple, easy way to have broad diversification across multiple asset classes. This high growth ETF is split into 90% growth assets and 10% into income assets. If you want to be a little bit more conservative, you can consider VDGR, which is the Vanguard Diversified Growth Index ETF. This is split between 70% growth assets and 30% bonds. VDHG has a low fee of 0.27%, and in the last year it's returned 2.41%. And in the last 3 years it's returned 8.09%. And since it listed in 2017, this ETF has had an average return of 8.34%. Now, you could copy the asset allocation in VDHG yourself, but for a low fee of only 0.27%, this is taken care of for you. Think of VDHG as a one-stop shop for Vanguard ETFs. Thank you for watching. I hope you enjoyed this video and you've learned about Vanguard ETFs. Let me know in the comments below what your favorite Vanguard ETF is. And as always, make sure to hit the like button and subscribe for more videos about personal finance, investing, and saving money. As always, an important disclaimer, I am not a financial advisor, this is not financial advice. This video and my channel is for general information only. As with anything in life, you should do your own due diligence and seek independent advice.